Traders are again worried over slow recovery in global fuel demand. The Russian ruble sharply lost ground in the recent 2 hours, although it opened with gains on Monday. Oil prices are wavering between gains and dips in the morning today. Oil is trading without a clear-cut trend, as investors are anticipating the summit of OPEC and its allies. Brent November futures were 0.08% down at $39.58 a barrel. At the same time, October WTI futures edged up 0.03% to trade at $37.27 a barrel. The summit of the OPEC Ministerial Monitoring Committee is slated for Thursday, September 17. Investors reckon that oil ministers are going to discuss compliance with deep cuts in production, although analysts do not expect further reductions. Market sentiment is dampened by the recent OPEC survey, when the cartel reported a slump in global oil demand, which is estimated at 9.5 million barrels per day by the end of the year. This figure is 0.4 million barrels more than in the previous forecast. Meanwhile, oil prices find some support from the rally in the U.S. stock market. Yesterday, the U.S. benchmark stock indices closed with almost 2% growth each. A sharp recovery in global energy demand came as a result of lifting lockdown measures in most countries. However, at present, a rapid recovery has drawn to a halt for the obvious reason: the second coronavirus wave. The International Energy Agency has presented a fragile monthly outlook for the oil market. The agency experts said that last month they indicated a cautious recovery in the market, but a month later the outlook seems to be more fragile. The agency says that the resurgence of the coronavirus in India accounts for a steep fall in energy demand in August, as Indian consumers cut their oil purchases. Moreover, China is also buying smaller volumes in September and October, so that suppliers have to amass redundant barrels. Another reason for soft oil demand is that oil processing plants are now operating at low capacity, thus unwilling to increase oil purchases. In the early deals at the Moscow exchange, the Russian ruble weakened to 75.18 against the US dollar, sharply down from 74.71 yesterday. Today, the dollar-ruble pair is expected to test levels below 74.5. Analysts at Sberbank suppose that Brent crude could drop to levels below $39.05 a barrel, thus opening the door to a decline below $38.04 a barrel. This week, traders await a report from OPEC, apart from a weekly update on the oil rig count from Baker Hughes. This information is likely to put pressure on oil prices. Oil storage facilities on land are about to be stuffed in full amid a global glut and a slowdown in the global economic recovery. This enables traders to freight more tankers to use them as a floating storage facilities. That's all for now. Thanks for watching and stay tuned.